Good morning, everybody. Welcome to the Mega Capital Funding Mega Webinar. My name is Will Fisher, and we're going to get started here at 11 o'clock. And we're going to learn about some new product from Mega Capital Funding and some jumbo product that we've had out for a little while now. Welcome to the webinar. And so, without any further ado, let's get started. It will just be myself today. And so I'll go through that here in a second. So we're going to start with who is Mega Capital Funding. We're going to talk about our current and new alternative products, especially Prime Jumbo, and then focusing on Mega Elite Non-QM, Mega Elite DSCR, Mega DSCR, or no ratio DSCR. And then we're going to go through a little pricing on our pricer and handle any questions that you might have. There is a question box, and if you fill those in, I will try to get to them as I see them. I am going to reserve some time at the end for questions, so if you want to wait till the end, that's fine too, and gather them all up. That's a way to go, no problem there. So let's keep on cranking through here. All right, who is Mega Capital Funding? Well, Mega Capital Funding was actually founded in 1998, and we are a Fannie Mae seller servicer, FHA mortgagee, and a USDA national lender specializing in conventional FHA and niche residential mortgage products. And emphasis on the niche because we have a non-QM product that's pretty out of sight, which we'll be going over today, and it's going to be one of the crown jewels in the Mega Capital Funding portfolio. Our CEO is Brian Na. He's an extensive history in lending, has owned this company since 1998, and has overseen our growth here to the point where we're funding over $500 million a month in certain months. So Brian's been a great leader, and he's given us the opportunity here to bring forward an amazing non-QM product, which we'll be going over today. A little bit of background on myself. My name is Will Fisher. It's just going to be me today. Unfortunately, Barbara is not able to present. And I've been in the non-QM, or actually in lending, for 18 years. Wow. So a little while, from subprime to today's non-QM. I was probably the first AE that I know of back in the space in non-QM in 2013. And I've built sales and marketing teams over at Citadel, servicing now Acra, and built the non-QM platform over at Arc Home. I've overseen about $6 billion of non-QM production since 2013, and I have a pretty good idea of what works and what doesn't and why. And that's why I'm going to be going over today how our program's structured, so you can see where your borrowers can fit and how they can fit. All right, so let's jump right on into it, shall we? Some of this stuff might look similar to you. I'm going to be going through the Jumbo Platinum, or I'm sorry, the Platinum Jumbo part of our product first. And as I go through, if you have questions, you can put them in, or you can wait till the end. Some of the questions I'll probably be able to answer, no problem, and some of them I might have to get to later. Also, some of the answers to your questions might be on the following slide. So without any further ado, let's jump into it. So Mega's Platinum Jumbo product is pretty unique. We have two, really, the PJ program and the PJE program. And they're going to allow for different aspects of funding features as far as loan amounts, DTI, units, property types. So just to begin with, we have our PJ program. So in general, 38 max DTI, 1 unit, $1 million, 90 LTV. Now here are some of the caveats of this. And the way we've designed this presentation, just so you know, is for our current brokers, so that you can have a deeper dive on what our programs look like. So for this PJ program, anything greater than 80 LTV is going to be exclusively wage earners. Okay, W-2. Self-employed borrowers are not allowed north of 80 on this product. North of 80, no first-time home buyers either. only up to 80% LTV for first-time home buyers, and it is a 30-year fixed term product that we're offering. For rate and term, however, we will go up to 80, up to 1.5 million, one unit. The PJ only one unit, 2.5 million up to 70 LTV. And second homes, one unit up to 1.5 and 75% LTV. We will, on the PJ product, do a non-owner. One unit up to $1 million, 70 LTV. And so there are different product codes, and the different product codes will be showing you here in a couple moments, towards the end when we go through the pricer, and I'll make sure to remind you to watch out for those. But the beautiful part about our regular old PJ product is that we can do non-owner, we can do $2.5 million loan amounts, and it's one unit only. So pretty strong. Now, what if this isn't a fit for you? What if your DTI is a little higher? Well, a little higher than 38%, and you need a little bit more cash out, or the max cash in hand is $1 million. Well, then we have the PJE. Now, the PJE is going to allow us a higher DTI, up to 43%. Our max LTV on this is only going to be 80. There is no 90 LTV, only 80. And the max loan amount will be capped at 1.5, but you get a higher DTI with this. And when we're doing the pricings, this is when it's going to become interesting. With our regular PJ product, you're going to select non-submitted for in the AUS in our Price My Loan. Oh, looks like I'm getting a call. And then our on-screen pricing for DU approved ineligible or LP approved ineligible, this will be used when we're pricing out in the pricer as well, so you can get the PJE product. I know it seems a little complicated right now, but we do have a cheat sheet for this that we'll make available after the presentation today. So I'm just going to keep finishing up on the PJ and the PJE product here, our Platinum Jumbo. So what's the big difference between these two, in addition to what we just went through a couple minutes ago? Well, number one, rate and term allows for the payoff of a non-purchase money second. That's pretty big. Non-purchase money second, we can call it rate and term with our PJ program. It's pretty nice. PJE, not so much. Cash back to the borrower is the lesser of $2,000 or 1%. With PJE, you can go up to 2%. Credit has a number of trade line requirements. With PJE, it's more towards the AUS. Whatever the AUS says, we're good with. Rental history, mortgage history, 0 times 30 times 2 years, or over a 2-year period. With PJE, whatever the AUS says. So the PJE is going to be more flexible, a little lower LTV, a little lower loan amount, but you might find more borrowers are fitting in this and giving you that really great rate that you're looking for from the Platinum Jumbo program. Also, collections will be required to only be paid off through whatever the AUS designates. With PJE versus the PJ, we'll most likely have to pay off all collections at time of closing. Another difference with our Platinum Jumbo product, there is a clear capital review required on our PJ program. There's only one required if the CU score is over 2.5 on the PJE. If a seller has owned the property for less than 90 days, a second full appraisal is needed. For purchases, the seller must have taken title over 90 days prior to the purchase contract date for the PJE. So these are the little nuances of the product. Now, some other points of interest, and we'll just cover these, and then we'll be jumping into some more non-QM type product. Number one, non-occupant co-borrowers contributing, or I'm sorry, no non-occupant co-borrowers can contribute income on this product. No history of any forbearance on any mortgages is allowed on this product. We want it pretty clean. Each borrower must have 2 to 3 credit scores. Its contingent debt can be omitted if the other party is a primary obligator. Deferred student loans must be included in the DTI. No getting around that. And paying off revolving debt requires closure to omit it from the DTI. So a little bit more straightforward. You want that really platinum interest rate for this borrower. These are the things we're going to need. Income, as you can imagine, 2 years returns required for all doc types and borrowers. 3 years tax returns needed if Schedule D shows consistent gains or losses, even if it's not using that income. And must have 2 years transcripts, cannot be provided by the borrower. So these are some of the nuances here. Rental income requires lease agreements as well as the tax returns. And assets, cash out cannot be used as reserves on this product, unlike non-QM. Gifts of equity are not allowed. Gift funds are allowed for down payment on owner-occupied and second homes. And business funds can be used toward down payment with a CPA letter, but not towards reserves. Other properties owned require an additional 6 months reserves. So for that sweet interest rate, you've got to have a pretty stellar borrower, and we will provide you with one of the best, if not the best, interest rates out there for this product. And that is, our PJ and PJE product. I'm not seeing any questions. I have no audio voice. Okay, let's see here. And let's just click on through. All right. That was our PJ product. If you have any questions, please hit me up in the taskbar and I will try and answer them best I can. I don't see any questions in here as of yet. And we'll just keep rocking and rolling. As for reserves, can they be retirement funds? I believe they can be. It will also depend on if you have access to them. But I'll tell you what, I see who the asker is. I will send out an update on that as all this is being recorded. So I'll be able to get to that with the exact documentation later on. Let's see if there's any other questions while I'm in here. Sorry, everyone. For some reason, my question bar is really small. It's not showing me all the questions. Okay, there we go. All right, so let's jump into non-QM. All right, so at Mega, we have 2 products, the Mega Elite Non-QM and the Elite DSCR. And these are flagship programs right now. And with these programs, the real devil is in the details on these. Why? Because we're going up to certain LTVs, we're going down to certain credit scores, but for Mega, it's about getting your borrower qualified. And so that's the main theme of what I'm about to show you, whether it's our income types with bank statements or it's going to be our DSCR. So our flagships here, Elite Non-QM. I'm going to show you the income types, what borrower profiles fit these, items needed to ensure a funded loan. Then I'm going to go through Elite DSCR, ratios allowed, items needed, and then the Mega DSCR and what the differences are. So let's keep on hustling through here. Okay, so with the Mega Elite Non-QM, we have really 3 main doc types. You have full doc, 1 year or 2 years. You have bank statement programs, and I say programs with an S because it's not just one. And then we have asset utilization as a supplement. Okay, so first one, pretty straightforward. You've seen this around. It's the 1 year income documentation. With this, we need most recent W-2, most recent paycheck stub, and 4506T. And that's what we're going to require on that. For self-employed, the current 1040s, 4506T, or the newest form as far as the 4506T goes, and a year-to-date P&L and balance sheet signed, or 3 months bank statements showing the cash flow. So you got an or there, not an and, a big or for a 1 year income documentation program. And the nice thing with this, there's no additional hits. No additional hits to rate for this program. You can get some pretty low interest rates with this program. Most importantly, you're going to find out later on, you can add asset utilization to supplement as income on this program. So anybody that you have 1 or 2 years income documents and you're coming up with a 52% DTI, 53, 54, 55, you can add asset utilization to supplement this income to get them under the hurdle. It's pretty unique. We'll get to that asset utilization piece.
Yeah, baby. Yeah. Yeah.
Okay. Now, bank statements. Let's get into the bank statements. There are really 3 types of bank statement programs that we offer here at Mega Capital. Number 1, 12 months personal. Number 2, 12 months business. And number 3, 3 months business. What you don't see here is 24 months. At Mega Capital, there's no need for a 24-month bank statement. We only need 12 or 3 months bank statements, and that's it, which is really nice. It really keeps things simple and clean for our brokers. So let's get into what the details are here. So first of all, 12 months personal bank statements. It's pretty straightforward. They've got to be personal. They can't have a business name on them. And most importantly, they can't look like they're being used as a business. So what do we need? You add up all the qualifying deposits. You divide it by 12 months, that's your monthly income. We may require 2 months of a business account to show separate business account exists. Now let's talk about what's a qualifying deposit. Well, I can tell you that selling a house and having that money deposited into your account would not count as income. Tax refund would not count as income. So when I say qualifying deposits, they can be transfers from your business because that's how you're paying yourself, and that would make sense. Counter deposits, so on and so forth. Any large deposits, will normally have to be sourced. Tell us what's going on with that and why they're there, and are they common for what your industry is and how you make your money. So you just got to be smart about it. And you can always ask your account executive or scenario desk here at Mega. Also, divided by 12 months, pretty straightforward there. You get to use all the deposits, 100%, okay, of the qualifying. And let's see here. So I don't think there's really any questions on that. I would hope not. It's pretty straightforward. Those have been around for quite a while. So now let's get into 12 months business statements. So for this is where we start to shine at Mega. We have 3 options for business bank statements. A lot of companies have 1, maybe 2. We have 3, and then we have a 3-month bank statement option as well. So let's get into it. What are they? Number 1, fixed expense factor. Number 2, borrower prepared P&L statement. You heard me right, borrower prepared. Borrowers prepared this P&L statement. And then last, third party prepared expense statement. All right. And so what are the difference between these? We've got a lot to unpack here. Before we do that, we also have the 3 months business bank statement. And this is the one where the CPA prepares the P&L statement. So let's get into the weeds on this, shall we? This is personally my favorite, and this is the fixed expense factor. Okay, it's 12 months business bank statements. And what will happen here is you're going to supply us with a business narrative, how many employees you have, what your company does. And what we're going to do is we're going to assess that information, and we're going to come up with an expense ratio or expense, factor ratio for you. We're going to base it off of full-time employees. FTE is full-time employees or contractors. Is it service business or product business? Now, what's 0? 0 means you're truly a sole proprietor. You're a one-man band. You can be anything from running a hot dog stand by yourself, or maybe you're a solo painter. Maybe you're a handyman. All right. So you don't have any employees. And if it's a product business, you have a 30% expense factor. And if it's service business, you have a 20%. 1 to 10 employees, 40% or 50% expense factor, or 10 plus employees, 70 to 60 or 60 to 70% expense factor. It's pretty straightforward. Pretty easy to provide that information. Just be smart about it. We will check your company, the company's LinkedIn page. We will look them up on Google. If you tell me they only have 2 employees and we find out it's a warehouse that has 45, well, we're probably going to ask you about it and hit you with the appropriate expense factor. But once again, you can always add an asset utilization. So there's different ways to get these loans done. But this is how we qualify the majority of business bank statements at Mega Capital Funding. Our next option is a borrower prepared P&L statement. Now, with our borrower prepared P&L statement, we allow the borrower to write it up, create hopefully a thorough P&L that shows us where their expenses are and what their profit use or their revenue streams look like. And we compare it up against 12 months of bank statements. All right. And if it looks like it's in line for the industry, then we're going to go for it. Now, our minimum on that would be a 20% expense factor. However, maybe you only need a 33% expense factor, and the P&L explains it pretty well. And we have the 12-month statements to show the revenue coming in, so that makes sense. So if you don't qualify quite on the just business narrative and the previous designations I showed a minute ago, this is another option for you. And let's see if we have any questions popping up here. Can a mortgage broker or originator qualify for this program? Ooh, well, if you're 1099 or you're paid as self-employed, then yes, you can probably qualify for a bank statement program with us, or just in general. And I'm pretty sure that's the question for that program. So I will say this, if you are going to do a loan for somebody in your office or want to, I can tell you right now that in our non-QM program that they have to do it with a different mortgage broker. So if you are trying to get a loan through Mega, you would have to send it to a different mortgage broker, at least a different branch. If you have a branch operation, would have to process it. And that's how we can do a loan for a mortgage broker here at Mega. But moving on from that, now our third way to qualify 12 months bank statements is third-party prepared expense statement. Now, what's different from this to a CPA letter? Well, a CPA prepared P&L is a P&L. A third-party prepared expense statement is literally on the CPA or tax preparer's letterhead, signed at the bottom, and it says, I've been doing this person's taxes for this long, and their expense ratio is this, and states a figure, whether it's 10%, 15%, 20%, 30%, whatever it is, as long as it's signed and on their letterhead, we will accept it. And then we'll, take that off of the deposits from the bank statements and qualify up your borrower using that income. So it's a pretty, neat way to go. Especially if you have a borrower who is utilizing a professional tax preparer, and you can get that letter, especially if it's in a space or an industry that we might qualify them at a higher expense ratio because of the criteria we put together before. So those are your 3 different options for using 12 months bank statements with Mega Capital in order to get your borrower qualified. All right, not seeing any other questions coming through. Next up, our 3-month business bank statement. So for Mega Capital's 3-month business bank statement, you need a CPA or a tax preparer to prepare a P&L statement, not just an expense letter, but a P&L statement. So we can see the breakdown of your costs, your revenue, and we just use the 3 months of bank statements to serve as support of the income on the P&L. Pretty straightforward. Nothing mind-boggling here. I'm sure you've seen this around. We can do it here too. I think we're priced pretty well on this product, and we look forward to getting them done for you. So moving on from here. Asset utilization. So why do I like this product so much? Been doing this product for a very long time. I know it works. Borrowers pay really well. And so how is it different at Mega Capital? At Mega, we use asset utilization to supplement any other income type. Let that sink in. W-2s, supplement it. 1040s, supplement it. 1 year tax returns, supplement it. Bank statements, supplement it. This is a big product. So what do we ask for on this? A couple things. Number one, I want 4 months of statements. 4 months of statements. Why 4 months? Because I want to see that the money's in there consistently. I want to see that it's not going from 50,000 to 400K to 100K to 300K. That's going to be a problem for us. We want to see stable assets sitting in there, right? Number two, we are going to take an LTV reduction if we do utilize this. Now it is only from max. So if the max LTV on a product is 80, but you're only looking for, let's say 70% LTV, then you're good to go. But if you were looking for 80, we might have to bump you down to 75. And that's how that would work. Some more information on this. What can we use? Well, we're going to use 100% of cash in the bank, 90% of stocks, 90% of mutual funds, 90% of bonds, 80% of 401k, 80% of an IRA, and 80% of other retirement accounts. Now, the one thing with other retirement accounts, they have to be vested. They cannot be what you'll receive in the future as long as you stay in the program. So there are some nuances to this, and we list them out in our guidelines, and you can contact your account executives to get more of that information. What's the calculation? Now, this is the most important part. 60 months. Other companies are 84, but here at Mega, we are 60 months. What's that mean? Let's say I have 300 grand in the bank. I take that 300 grand, I divide it by 60. That's an extra $5,000 a month in income that I can add to my W-2s, 1040s, other bank statement loans or products that we have. It's a pretty big product. So I would have, highly utilize this if your borrowers have the means, because this is a way to get your loans done. Mega Elite debt service coverage ratio. Let's get into some DSCR. All right. First up, Elite DSCR. It's a pretty straightforward product here at Mega Capital. It's 1-to-1. Some companies are 1 to 1.5 or 1 to 1.25. Here at Mega, we're 1-to-1. So basically, if your PITI is $2,000 a month, we need to see monthly rents of $2,000 a month, 80% LTV, $1.5 million loan amounts, 660 minimum FICO, purchase, rate and term, cash out. Cash out's limited to 70% LTV, and that's the only big difference there. So pretty straightforward DSCR product, just your standard issue DSCR. Our rates right now are pretty ridiculous on this product. I would definitely check them out and compare them against anybody you want. And we will match or beat anybody else out there in our products right now. But right now, I believe we're leading the way with this, especially in that 65 to 80% LTV range. So what is Mega DSCR? Mega DSCR is our no ratio calculation. What's that mean? $2,000 in PITI, 2 doesn't matter. Why doesn't it matter? We don't require a rental contract. Don't care if it's a purchase, rate and term, or cash out. Doesn't matter. No rental contract. Up to 60 LTV, up to $1.5 million loan amount, 720 minimum FICO. Just basically need an appraisal. And part of the 1003 filled out. That's about it. 1007 we will ask for. However, it's used as file filler. We're not doing any calculation or qualification based off the 1007. This is fantastic. You've got a loan, you've got to close it, you've got to get it done. This is the product for you. You need cash out like yesterday. This is the product for you. Once again, our DSCR is a business purpose loan, so we're not hamstrung by certain wait periods from TRID. You also can do borrower paid comp, LPC on this, however you like to do it. So there's a lot of options with Mega's DSCR program. Let's see here. Other questions? Okay. So I will just keep trucking along. All right. So now I'm going to cut to a demo, and I'm going to bring that up on screen here. Just give me a second. And we can price out some loans. Hopefully you all can see this, but this right here is our Price My Loan, which you can, if you are approved broker with us, is how you can come into our system and actually price a loan. I can also show you on our rate sheets as well. But quite simply, I want to show you this because I want to show you the product codes and how that's going to work and how you're going to actually price a non-QM loan with Mega. So let's just pick a zip code. All right. Do a primary residence, SFR detached. We will do a purchase for now. Actually, let's do a refinance. We'll just go rate and term to keep it simple. And let's pick 12. Now you're gonna notice that we have in our drop down, and hopefully y'all can see this, 12 months personal bank statements, 24 months personal bank statements. The 24-month personal bank statement and the 24-month business bank statements are not active. So if you select those, you're not going to receive pricing, or you shouldn't receive pricing. If you do, for some reason, most likely it'll just be the 12-month, but I'm pretty sure we deactivated it. So the only ones that should work are the 12 and 12, personal or business. And then we'll keep going down the line. Our other bank statement product is our P&L. The 1-year tax return is pretty self-explanatory. VOE is not active yet, but it is a product we're looking at bringing out. Asset utilization. Now this is standalone asset utilization, which is also something we're looking to bring out soon. And then you have debt service coverage ratio and no ratio. These are both active right now. So asset utilization as a supplement, I'm going to show you here in a moment. So we'll click business bank statements, put in home value, let's just say $1 million. And we'll just say 70% to keep it all easy. We're pricing out at a 45-day lock period. Now, with non-QM, you have to price out at a 45-day lock period, right? We're going to pick borrower paid comp, and then here, this is the big one. What to select? So for non-QM and for PJ, we're going to select none not submitted. Let's take that credit score on up. We're going to change the number of properties to 1. Now, we auto-populate monthly income and total liquid assets. If you want to get real technical, you can update these and see what you get. Otherwise, you can leave them as auto-populated. Number of properties owned, we'll put 1. Since this bank statements and we're self-employed, we know that, we'll pick that 2. So let's run some pricing. Now, sometimes our pricer will come back with nothing, but you give it a couple seconds and then it should come back with results for you. So there we go. It's come back with nothing so far, but boom, there it is. A little delayed reaction, you know, to get you all your anticipation up. So here we are on this 70% LTV, $700,000 loan amount. You're looking at the closest to par right now is 4 1/8 in Orange, California, 12-month business bank statement. Not bad, not too shabby. That's under our EZB30. Now, what if you want to use asset utilization? You click the plus sign, boom. Now you're going to see EZBA, and the A is for asset utilization. What's that do? It changes it. So now there's a little bit more of a cost because there's a little bit more of a risk for us. I'm sorry. Yeah, a little bit more of a risk for us. So that's where we're at. But for like example, 4.25 would be par on that. So that's actually a pretty good rate if you needed asset utilization to be part of this. So that's basically how it works. Hopefully that understand. I'm going to look at the question section, see if there's anything in there. Not seeing anything else. All right. Now let's try a PJ here. So if I change this income to full doc, I leave everything else. Maybe I take this up to 80% LTV. Actually, you know what we'll do? We'll go 2 million. And let's see what we get now. I think I might have to change my lock period. And what we're looking for is our PJ pricing. And we're still getting easy B. So we will adjust that. Okay. And there we go. There we have it. So for this particular one, going full doc, what we have is 3.375 at par. And that is on our PJ 30 right there. So pretty straightforward. That's the only thing you had to change is you had to update the lock period to 30 days. And that's a $1.6 million loan amount, full doc from our Platinum Jumbo. Now let's make it more interesting and change it on up to a DSCR. So for DSCR, we're probably gonna have to change that loan amount. And let's go 80%. And we'll go rate and term refi as well. Change this back to 45 days. Let's see what we, oh, I need to change the property type. So we're probably not going to get anything because I left it as a primary residence. Well, I do have a PJ product. Well, that's because it's a primary. Hold on, let me adjust that. All right. All right. So here, this is a great example. Let's take a look here and let's find out why it didn't price. So So 1-year tax return for that. Well, we're not trying to do asset depletion. We're not trying to do full doc. Not trying to do bank statements. We're trying to do DSCR. Oh, here we go. All right, let me change this up to a purchase. All right. And there we go. So as you can see, on a 3-year prepay, we're looking at 4.625 with a 3/8 cost, or 4.75 with an 1/8 credit. And that's our EZD 3P30. So that's a mouthful there on the product code, but that's how it goes, and that's how you would price these. So for our non-QM, 45-day lock. For our other programs, 30-day lock. Also, the none not submitted will get you PJ pricing, and it'll also get you our non-QM pricing. If you wanted to do the PJE, you would pick a DU approve ineligible, or where is it? Or the other LPA except ineligible as well. So that's how you get your PJE products. And that pretty much wraps up. One last thing, actually, I will bring up real quick is our rate sheet, which comes out every morning. Hopefully you're receiving it. And you can see our pricing and how we fit in. It's pretty straightforward. A bank statement, 720 or 700 FICO, 70 LTV, 1 1/4 to price, puts you right here, 4 1/4, paying 1/4. That's pretty phenomenal at 70 LTV with a 700 score. So pretty easy to price off our rate sheets as well, and hopefully you're receiving these every day. I will say we do have some pretty exciting stuff coming out in the coming weeks here, and we look forward to presenting you guys again those new products on our next webinar, which will be the 12th of May. So let's see if we have any questions in the box here. All right. Doesn't look like we have any questions. So hopefully I've communicated everything that y'all need. Let me see if I can open up the audio, see if I can take any audio questions. Oh, it looks like it doesn't let me. Well, that's a bummer. All good. Well, if there are no other questions, thank you very much for your time today. We really appreciate you taking the time to spend with Mega Capital and learn about our programs. You can find just about everything you need on our website at mcfunding.com. Please reach out to Scenario Exception or sales at mcfunding.com for additional questions. Your account executives are phenomenal resources. And the one thing I will add is that we will allow you to look at, or we'll take a look at your bank statements before you want to submit your loan, so we can find out exactly what deposits will allow, and let you know so you can qualify your borrowers better. Thank you for your time today. Once again, this is Will Fisher signing off for Mega Capital Funding. Thank you. Have a great day.